Welcome to another video yet again. Do have some very nice plays to show you, multiple different plays. It's going to be an extremely packed video. Smash that like button if you are enjoying this content. It does really help me out. I appreciate that. But let's just dive right into it. So I do have a 36 cent, a tiny $6 million valuation market cap penny stock to acquire a profitable and debt-free company that did $123 million in revenue in 2023. When we're supposed to hear an update as they do proceed to the next step in this merger and get closer to finalizing this, and they said we should hear an update in early October. So within the next week or two, could see another massive update. Actually just came out with another update today. So this one does have multiple catalysts pending. I also have a $1 penny stock with a merger expected to close within the next 3 months. It does have this massive gap to fill to just around $3 on this daily chart right here. So this one is worth watching. Does have another historic catalyst coming very soon. Also have a profitable biotech play with no dilution. The outstanding share count has only went up around 2 million shares within the last 7 years, I believe, maybe even longer than that. But why am I watching this one? Well, first of all, looking at the daily chart, you can see is in the demand zone, is in the bounce zone. So we could see a very nice bounce from this current level. And they just had their most profitable and their most revenue producing quarter in the last year. Could be in the last few years, but I've only really looked at their last few quarters. And they, something else to realize, they just signed 3 new distribution agreements just in the last month or two. So that's very big and actually shows that they can continue to make and produce these record revenue and profitable quarters. First off, we do want to talk about is trading at 34 cents. Does have a very massive catalyst to acquire a company that did, basically over $128 million in revenue for 2023, is growing very rapidly. So SGN Signing Day Sports Inc. is currently a technology company that engages in developing and operating platforms to give student athletes the opportunity to go to college and continue playing sports. The company offers Signing Day Sports, a sports recruitment platform to help athletes get discovered and recruited by coaches and recruiters across the country. They are about to acquire Swifty Global, which is a company I have covered multiple times in the past. You can see this one actually ran to 30 cents, is actually tanking today, but you can see this is the company they are acquiring, which is a sports betting powerhouse, has their own app and their own development team that has been doing this, basically in this sector for decades. They have around 30 different team members, I believe, that actually develops their own technology in-house, which is a very competitive advantage and actually can, dramatically improve their profit margins, because they are not going through a third party to do this. So SGN, this $6 million company, is about to acquire DRCR. You can see they did $128 million in revenue and profited $2.5 million in 2023. For their most recent quarter, did $23.9 million and profited $170,000. Do have a very nice balance sheet with basically zero debt. So that is very positive. So looking at this, SGN actually, they actually want to put out an update or forecast an update in early October as they do proceed and get one step closer to finalizing this massive merger. But, I actually did not get in this play because by the time this PR came out, the initial PR, this one went up around 200 or 300%, actually hit 76 cents and is currently down to 32 cents right now. So guys, I want to chase this one. But as it does cool off, we still have a massive catalyst and are expecting an update in October. So SGN, the company acquiring DRCR, is a software company that went public just less than a year ago. So it hasn't even been on the market that long, is trading on the New York Stock Exchange. So one big thing to realize about this merger is DRCR, the most important company, as SGN is losing money, doesn't really have any financials. Looking at their quarterly income, only have $204,000 and lost $1.3 million in the second quarter of 2024. But something very massive right here is DRCR is an OTC Pink current company, meaning that some very big name and institutional investors will avoid trading this company just for the plain fact that it is an OTC stock. So whenever this one does uplist to the major exchanges, and if this merger does go through, we will actually see a lot of big buyers interested in DRCR, which will actually be trading as a subsidiary of SGN. So Signing Day Sports Inc. is one to watch. One thing to realize, they have been trading under $1, I believe, for almost a year now or something, just a massive amount of time. So a reverse split could be a concern with this play. Next, how we want to talk about is a biotech and pharmaceutical play, actually in the medical equipment sector and much more. Ticker INFU, InfuSystem Holdings Inc., trading at $5.97. Now, looking at this chart right here, is actually trading in a bounce zone, in the demand zone, and we could see a very nice bounce from this level all the way to basically, 660 or just under that. It just depends, but I'm going to tell you exactly why I do like this play. Now, looking at their market cap, they do have a $137 million valuation, but only have 21 million outstanding shares. This has not basically only went up 2 million shares in the last 5+ years, or maybe even the last 10 years. So very minimal dilution. Looking at their revenue, they actually did $125 million in revenue just in 2023, actually profited just under $900,000. Keep in mind, you always add 3 zeros to these numbers, but looking at their last quarter, saw historic marginal and revenue improvements, as they did $33.7 million in revenue and had $717,000 in net income. You can see this was the most profitable quarter they've had since the second quarter of 2023. You can also see this is the most amount of revenue they've done in the last year as well. So looking at their annual revenue growth, has been steadily climbing since 2020. Guys, looking at their balance sheet, they do have $55 million in total liabilities, but they have pretty much double that in total assets. Do have $146,000 cash on hand. Now, looking at their long-term debt, this is sitting at $34 million. So that is a pretty big chunk of their total liabilities. Basically, their total assets are pretty close to their market cap, and they are a profitable business, and their revenue numbers are at all-time highs, especially for the last few quarters, as well as their profit margins. And not only that, they've announced 2 massive distribution agreements that can further increase their financial numbers. So just over a month ago, InfuSystem announces distribution agreement with Smith & Nephew for negative pressure wound therapy system and first shipment of NPWT system. So under this agreement, InfuSystem will offer Smith & Nephew's advanced Renaissance Edge negative pressure wound therapy system, which is an exciting new option in home-based care for patients living with chronic wounds. The CEO of InfuSystem said, based on their more than 800 in-network health insurance providers covering over 96% of the U.S. population and our well-established and trusted service capabilities, Smith & Nephew actually reached out to them. They approached InfuSystem to assist them as a secondary distribution partner for this device and system that they plan to help with, so that can further increase their numbers and their revenues very significantly. But guys, there is a very massive update we have to talk about. This was actually announced just around 10 days ago. Sonara MedTech Inc. and InfuSystem Holdings announced exclusive United States distribution agreement with a minority investment in Chemo Mouthpiece LLC. Something very big about Chemo Mouthpiece LLC is they just recently received 510K clearance, which means they can market and sell their products in the US. And they do have the Chemo Mouthpiece, which is shown right here, which is some breakthrough technology. I'm going to tell you exactly why. So the Chemo Mouthpiece is intended to be used to cool the oral mucosa to reduce the incidence and severity of chemotherapy-induced oral mucositis in adult patients. So basically, mucositis is a common side effect of cancer treatments involving radiation or chemotherapy. So they have this breakthrough technology that has completed its randomized placebo-controlled perspective in this multi-center trial, and it was a success, obviously, because they did receive 510K clearance, which was a very big deal. And the Chemo Mouthpiece LLC has filed for numerous patents, both in the US and globally. So a number of patents have already been granted, and the status of those not granted is either published or pending. So you can see this picture right here. The Chemo Mouthpiece reduces patients' oral temperature by an average of 31.2 degrees Fahrenheit, while ice chips, which is the traditional current method, I believe, only reduces it by an average of 23.2 degrees Fahrenheit. It also cooled the oral cavity more uniformly. So this is a much more efficient device and method for treatment of mucositis or whatever. So basically, you can see this before and after picture is proof that it works. Also, their trial was a success. So Chemo Mouthpiece LLC, the makers of the Chemo Mouthpiece, have chosen ticker INFU and Sonara MedTech to distribute and market this product. Now, this is very big. So how does Chemo Mouthpiece actually benefit from this? Well, they do get a royalty deal for each product that is sold. So Sonara MedTech and InfuSystem, ticker INFU, have created a joint venture, so a partnership to basically distribute and market Chemo Mouthpiece. So this joint venture is called SI Healthcare Technologies LLC, which is a 50-50 joint venture between Sonara and InfuSystem, and will be the exclusive distributor of the Chemo Mouthpiece kits in the United States. So SI Technologies plans to market and distribute the product through InfuSystem to approximately 3,000 cancer centers through InfuSystem's existing sales team. SI Technologies will purchase the product kits from Chemo Mouthpiece at a fixed price and pay a royalty on net revenues for the use of the product on intellectual property. So Sonara is their partnership with this joint venture. They've invested $5 million for a 6.6 ownership position in Chemo Mouthpiece. SI Technologies will also have the purchase option that expires in January 31st, 2029 to purchase the U.S. business of Chemo Mouthpiece, including all U.S. intellectual property related to the product. Sonara has drawn $15.5 million on its term loan with CRG Servicing LLC and will fund this investment as part of that draw. So to me, what I'm understanding right here is Sonara is basically funding this, and then basically InfuSystem will be the exclusive distributor using their system, which already has 3,000 plus cancer centers through InfuSystem's existing sales team, plus a tremendous reach. So as long as that's true, we should see no dilution with INFU, which already has a very small cash position sitting at 146,000. So I am hoping that is the case. That's what it looks like to me. Ticker INFU is one to watch that is growing very aggressively, does have some massive plans. Now looking at their reach right here, they looks like they are serving almost 5,000 customer locations, have 500 plus employees, 7 different centers and locations in the US and Canada, participating in network provider and over 800 health insurance networks covering over 96% of the US with over 2,450 facility customers. So do have a very nice reach right here and a lot of opportunities that are coming up. Video is getting way too long, guys, so this briefly going to cover ticker KAVL, trading at $1.35, which does have a very big catalyst coming up. So wait for this one to cool off, and then we're going to look at this one again. But Delta Corporation Holdings Limited, a fast growing asset light logistics company, enters into a definitive merger and share exchange agreement. Looking at this one, you can see it did reach a high of just around $2, was halted multiple different times. The flow is very small. We did have massive volumes, almost 200 million in volume coming in, but we do have to realize they are entering a gap. Actually got rejected off of it, but there is a massive gap to fill from $1.60 all the way to just under $3. So that's what we're looking at right now. Doesn't mean it will fill, but does have a massive gap to fill. It is one to watch to see what happens, as this merger is expected to close in Q4 of this year, so within the next few months. Did just receive an alert as I just started making this video. So Rolly Law PPLC or whatever is investigating this proposed acquisition of ticker KAVL. It's definitely put on your watch list and watch this one as we do get more updates with this ticker KAVL. And that's all I have for the video, guys. Let me know in the comments what other plays you're watching, what do you think of these plays, and I will see you on the next video.